Oh boy. Tesla released earnings last week and it's down nearly 14% in the last 5 days. Tesla itself is down 12.53% in the last 5 days. So this stock is getting absolutely hammered. If we look at the last month, it's down nearly 30%. And if we have a look very quickly of when I started, you can see here it just keeps going down and down, and then the gap down from earnings and where we ended up in the week. So we'll go through how much money I've made, what is the impact of my P&L with Tesla dropping again, and then we'll look at the charts on what's happening, where the current weekly pivot's sitting for the next week. So if you like the sound of that, all I ask for is that you smash that like button and don't forget to subscribe. So we can see here that the current balance is $24,219. So we started this challenge with 30,000. We've got paid $2,211 in dividends, so that's absolutely fantastic. And you can see that the return at the moment, if we reinvest dividends into this portfolio, is minus 19%, but I am withdrawing all of the dividend. So therefore my ROI on this overall challenge is 25%. So let's go through what happened last week. And let's start with the covered call. If you guys are brand new and don't understand what the synthetic call is and the covered call positions, the first link in the description will take you back to episode 1 of this challenge, which walks you through the whole process. So if you guys remember, we sold the 220 covered call, which was over here inside of week 5. And what happened is the day before earnings, Tesla was just below my covered call strike. So I couldn't really do anything with that covered call because there was inflated premium in there. And the synthetic call was roughly around the current price. So there's not much I really could have done, and just really to wait. I'll be honest, I think I talked about in the last video, I did think Tesla's earnings would go down. I would have kicked myself if it went back up. So it is what it is. And on the Friday, I decided to buy this option back for $1. So earnings was on the Wednesday after the bell. So we had Thursday and Friday, but I really couldn't roll this down to the synthetic 217.50 because it was like for $3. So it just really wasn't worth it. So this was the first week where I didn't double dip, where I sold, I bought back, and then lowered down my call strike to either the synthetic call strike or just above the current synthetic call strike. And that's the way sometimes it happens. So I could have just let it expire worthless, to be honest. I didn't. This was a bit of a schoolboy error, taking $2 of debit and plus commissions to be able to take this one off the table. So you can see here, I've just put it in there as earnings so we know. So we netted a total of $398, which is still, just under $4 of dividends, 1.48% of the current balance. And you might notice, for those who watch all my videos, that this is kind of changed slightly, because what it was doing was taking the capital of the current balance, not the balance at the time. So I've updated these and hard coded these percentages in there. And what you've noticed is as Tesla goes down, that the premium collected also goes down as well. Yes, I've double dipped in some of these, so therefore they might be slightly higher, but if you take it as a percentage of capital, you can see it's decreasing. Earnings were slightly better only because of the inflated premiums that were available, which is why it was slightly higher than the week before. But on week 6, I rolled from the 220, or I closed the 220 out and opened the 187.50 for $266 or $265 when you net out commissions. So 265, which is 1.12% of the balance. And this is my estimated position, because again, I could close this out for a potential loss and make money on the synthetic. I could double dip if Tesla continues to go down, all these other different things in there. So this then would take the dividends up to 2.4K, which again is for 6 weeks. It's not bad. It's the 10% return on the additional 30 grand of capital. But again, my principal is declining at the same time. So what happened with the synthetic options? As you can see here, we have the 217.50, and Tesla's trading at 183.25, right? So I had to reestablish the position to be able to get any decent covered call premium. So I closed this out, and this is a big loss, probably the biggest loss I've had, of 3.6k for the week. Because again, if you look down at the chart, we went all the way here from 200 odd all the way down to a low of 179, 180. So that's where that massive drop is coming from. And then I reestablished the position at 182.50 with Tesla trading at 183.25. So we're thereabouts now at the strike. And again, we've got the covered call at 187.50. So, you know, $5 above it. So there's a potential gain here of $5 this week, plus also some of the potential premium on offer. So my current unrealized, you know, it's kind of flat at minus $75 in the account. And yeah, you know, it is what it is. And just the timing couldn't be better in terms of trying to trade this and ride Tesla up. So hopefully you guys are starting to see now the downside of the kind of TSLY or covered call type strategies, where even though we're not buying the shares and selling calls against them, we're doing it synthetically, which is only costing me $4,000 in margin to do this. This is why that when the stock goes down, you are capturing all that downside risk. And as we saw here on the first one, you are capping your gains to the upside. And to be fair, I've not really had any gains to the upside really of when I started this at 255, the high of 265. So there's only a $10 high that I've had. And I've been watching the stock all the way since the back end of December go from 250 all the way down to 180. So we can see here why I love pivots by quite a bit. As we talked about in last week's video, is there is a tendency, or even in a downtrend, to retrace off your pivot level. We saw it here. We have a missed pivot over here. And again, we've seen it here. Even with these little wicks here, we can see that it gets up to its pivot level and then continues its way down. So what I've done is I've strategically placed get rid of these, strategically placed the weekly pivot. So I've done this manually as I've always done. And you can see here it is trading around the 193 mark. And if we have a look at where my my cover call's at 187.50. So again, I only really need it to get to around this area around here for a potential, even if it continues to go down. So you can see here we're extremely oversold on the 1 hour. And if we go to the daily, you can see here we're also extremely also with the RSI sitting at 18, which is very, very low. So I am expecting at least some consolidation before it goes to a leg down, or potentially, you know, even a leg up to kind of fill in this gap over here. So hopefully we're expecting some upside here. You know, the ride of earnings. I think probably what I have learned from this process is probably stay away from earnings, even though you might think it's going to go high. But then again, you just kick yourself if it goes the way you want it to go, and you know, you feel like you missed out. So that's why I'm just continue playing, sticking with the plan. I wanted to make sure that my covered call was below the missed pivot. So even if it gets to the missed pivot, then I can do some, you know, thinking of what I want to do, at least close out the whole position and reestablish on the Friday, whatever that may look like. Just trying to capture all of those gains as best as I can to crawl back some income. So that's kind of where we're at overall. Like I said, I'm just showing you guys how my TSLY fund is performing. It's not performing that great, but you know, we're still making the dividend payments. And again, it is all about timing. It's just all about timing. So even if we look at TSLY for the last month, it's down 30%. And I've been going for around a month and I'm down, you know, 25%. So we're thereabouts. So I am replicating the fund as I mentioned that I would. And if you guys are interested, again, got so many other videos on options and things like that. So check those ones out, and I shall see you guys in the next video.